It's a beautiful Tuesday morning right here in Lagos, Nigeria. Good morning, good evening, wherever the world you're watching from. It's Business Morning live from Channels HQ. I'm Ladi Williams. It's great to have you share your morning with us. But let's take a look at what's happening with the markets now. Starting with oil prices. We see oil prices rose today after dropping yesterday as markets weighed supply cuts for August by top exporters Saudi Arabia and Russia against the backdrop of an uncertain global economic outlook. Brent crude futures climbed by 34 cents, about 0.46% to $74.99 a barrel in early trade, while U.S. WTI crude, that's trading at $70.12 a barrel. That's up by 33 cents. We'll drill down on market drivers later on the show. To other stories now, we see that the headline Purchasing Managers Index of Nigeria's private sector that fell 53.2 points last month, down from 54.0 recorded in May. Business confidence fell to the second month level on record. According to the latest survey by foremost financial institution Stanbic IBTC, the reading, which remains above the 50-point mark, still signals a solid monthly improvement in the health of the private sector. However, firms faced a much stronger inflationary environment at the end of the second quarter of the year as the removal of fuel subsidy by the Tinubu administration took its toll across the business environment. At the same time, employment rose modestly for the second consecutive month as the overall business conditions remained on a positive trajectory. The Stanbic IBTC PMI report further shows that companies increased staffing levels for the second month in June at a slight but fastest pace since January this year due to increase in the amount of workload. On the other hand, the survey indicates that new export orders dropped in June, ending a 3-month expansion, while new orders increased but at a slower pace at the end of the second quarter. Meanwhile, the Stanbic PMI report shows that firms increased purchasing activity last month, but at the softest level in the current growth sequence in order to meet customer requirements, while output price inflation jumped amid sharp increase in purchase costs. And a statement released by Zenith Bank PLC indicates that the financial institution has retained its ranking as the #1 bank in Nigeria by Tier 1 Capital in 2023 Top 1,000 World Bank rankings. A ranking published in the July 2023 edition of the Banker magazine of the Financial Times Group, as the United Kingdom were based on the 2022 year-end Tier 1 capital of banks globally. Commenting on the ranking, the Group Managing Director, CEO of Zenith Bank PLC, Dr. Ebenezer Onyagu, he said being ranked as the #1 bank in Nigeria by Tier 1 capital for the 14th consecutive year attests to their resilience as an institution despite a very challenging macroeconomic environment and global headwinds. The bank has held its position as the #1 tier 1 bank in Nigeria, emerging as the 467th bank globally with a Tier 1 capital of $2.54 billion. Well, after the break, we look at the pension industry in Nigeria. Pension contributors growing, employers paying contributions. We'll find out more later on the show. Just stay with us. This is Business Morning. Well, to our first conversation, the National Pension Commission says it recovered 384.28 million naira pension contributions owed by workers by defaulting employers in the first quarter of 2023. Some employers have found of not making these contributions. Let's talk to Oguche Aguda, Chief Executive Officer, Pension Fund Operators Association of Nigeria. Penna, great to have you on the show. Good morning.
Great to be here, Larry. Good morning to you too.
So in the last 10 years, we see Pencom has recovered over 24.53 billion naira from defaulting firms, with 12.44 billion in principal and 12.09 billion naira in penalties. It's quite a sum. What do you think? Why do you think some of these employers are not, making these contributions? Is it about retaining profit, or the business climate is just too, harsh for them? What's the issue here?
Well, I guess the honest truth is the first thing is that people will will go around the law if they think they can get away with it, right? So if they don't think they can get away with it, they'll do it. That's number one. Number two is just business practices. So if you look at either the multinationals or large corporates, they typically will comply. So it's perhaps the small businesses, and then you can say perhaps maybe business sales are low or revenue is low. But what we always say is pension is not the first thing to cost, because number one, you as an employer, if you continue to pay pensions of your staff, it helps you to attract better staff. And then it helps your business in the long run. If you want to bid for government contract, if you want to list on the exchange, if you want to raise money internationally, you will need to have those in check. So, it's a bit of both why people are not paying their pensions. But I think what we always preach is, as companies, it's something that will benefit you, benefit your staff, and it's the right thing to do. But kudos to PenCom, who goes after those companies that are not paying with the recovery agents and try to recover. They've done a good job over the years. And I think in the first quarter, like you alluded to, about 300 million plus was recovered from companies that hadn't paid their pensions.
And looking at, the recovery, it's quite a sum. How difficult or easy is it to, recover these monies? And where does it go when it's recovered, and the penalties, where do they go?
No, it goes back to the staff. It goes back to the staff. So it goes back to credit their RSA account. So you as a staff, for instance, Ladi, if your organization is not, a new channel is compliant, you whistle blow to PenCom, and PenCom meets those companies. And then what happens is that they calculate how much you should have earned. And that's what the penalties are doing. And it goes back to your own account as a staff, your RSA account. So don't forget, with the contributory pensions scheme, what happens is that every individual has its account. You see how much is going into your account. So if 1 or 2 months your employer is not paying, if PenCom recovers, the money goes back to your accounts. Same with the interest and the penalties.
All right, let's look at the micro pension, plan. That's the one for, self-employed and organizations with, less than 3 staff. Well, how's that looking? How's that segment growing, since it started? Are we making any headway there?
We're making headway, but not as much as we would have liked. So it started in 2019, and as you know, COVID hit, and there were a lot of things in terms of purchasing power. So the numbers have not ramped up as we would have liked, but we are sort of going back to it, looking back at the product, asking ourselves, what do we need to do differently? How can we get more people to contribute to it? It's voluntary, but it's more for people in the informal sector, self-employed. It's like a self-sponsored plan, right? And currently, the assets under management for micropension is less than 500 million naira. We're hoping that it grows further in the coming year, because really there's going to be an epidemic if, in a number of years' time, many Nigerians grow old and they don't have something to fall back on. So it's something for the informal sector, and we're sort of preaching the message of save for your future, engage in a micropension plan. And that's something that we hope many Nigerians get on board and begin to save for their future. As someone said, you can't depend on your kids again to look after you when you're old. So start by saving for micropension. It's slow, but we're hoping for it to pick up.
Right, and definitely the kids are definitely going to add to that, at some point. Well, let's look at the retirement savings account, membership. Total of 9.9 million members. Further breakdown shows majority of new registrations are men. What does this tell us?
Well, I think first thing is that, there are about 10 million Nigerians on the contributory pension scheme, and that's good. The number is good. It can be more, but at least it's good. 10 million unique accounts, if you will. So it's about 60-40 in terms of new registrations. Men 60, women 40. I think it just means that there are more men working in the formal sector. That's just the simple answer. And I think if you look back historically, I think we've made a mark in terms of women getting to work, but it's still not at the 50-50 level. But 60-40, I think it's fair. It was much down when the pension industry started 16 years ago, and we've seen an uptick to 60-40, and hopefully, we can get to 50-50 at some point.
And also, I see about 46% of new registrations are below 30. More than half of the new RSA registration workers are in their 20s. That looks good. How has that been the trend before now?
Yeah, and that's a good sign, Vladi. And I think it will continue. That has been the trend. I mean, because it does make sense that, when you're registering newly for your pensions account, you're just starting work. So it's people that are just starting work fresh out of school, just joined companies, or just started formal work. So some people might have been working informally and just started formal work. It's typically people below 40. So that carries a huge chunk, like you said, 50% of the people. Even though there are some people who are in their 40s and 50s who are just getting formal work for the first time. That's negligible. But the strongest growth is from those under 30, and that is good for the scheme, meaning there are new people joining, young people joining, and they will probably be there for the next 30 years. Of course, they'll earn more, so their earnings and the contributions to the pensions will increase. So that's good for the scheme, and that has been in the past, and I will continue. We believe it will continue.
And that age, bracket, they have like wiggle room to take on more risk and, still growing their pension at the same time, which is good for them. But I know the Commission launched a policy allowing retirement savings account holders to, utilize a portion of their retirement savings to, pay mortgages as equity for mortgages. Do we have any success stories so far?
Yeah, we have success stories, and maybe next week or sometime I'll love to bring some of the people that have owned their homes through this process, right? It's still beginning, and there are a number of people that have owned their homes already through this process. So yes, there are success stories. It's still early days, and I believe that in the next couple of months, weeks, years, we'll hear more success stories. But I intend to just come and showcase some of those success stories of people who have been contributing consistently to their pensions and have used a portion of their pensions to pay as a down payment for their mortgages and everybody in their houses. And that, we think, is brilliant.
Yeah, I definitely can't wait to see, people, those people and, hear their stories. But what are you seeing for the second half of 2023 in terms of, RSA growth and, compliance by employers?
Yeah, so PENCOM, like I said, have done a good job, and they will keep on hammering on the fact that people need to comply. So there's a department in PENCOM which is compliance, and their job is to go after companies that are not paying. First is moral suasion, administratively engaging them. Why have you not paid? What's the issue? And if not, penalty. So I think that will continue. But also it's just to encourage firms to keep on paying, because it benefits you. Like I said, if you want to do government contracts and you don't have a pension plan certificate, you won't be able to. If you want to list on the exchange, you won't be able to. So it's beneficial for companies to pay their pensions. We also believe that growth will be strong. You've seen the equities market has gone up year to date, and the pension index year to date has gone up more than 40%. So the constituent of the growth of pensions is contributions and assets growth, and we think that will continue. So second half of the year, we also see strong numbers for the pension industry.
All right, we'll definitely be tracking growth there for the pension industry. Thank you so much for coming on. Uguche Aguda, CEO, Pension Fund Operators Association of Nigeria. It's great having your perspective today.
Thanks, Larry, for having me. Look forward to coming to showcase some of the success stories.
Exactly. Looking forward to that for sure. Thank you so much.
Thank you too.
All right, so after the break, Commodities Market Update is next. Do stay with us. This is Business Morning. Welcome back. Let's take a look at what's happening in the commodities market now. We have Bolanle Egbaje, Senior Analyst, Financial Derivatives Company, joining me right here in the studio.
Hi.
Great to have you.
Thank you.
Good morning. And we're seeing the Naira again. The Naira is trading again, this time strengthening But big move there, 741
yes,
at
but
the
that's,
I and E window.
No, but that's in the parallel market.
In the parallel market?
Yes, in the I and E window, we have about 792 naira.
792. So it's still stronger there.
It's still stronger in the parallel market.
Right.
But we're pretty sure that very soon there will be some sort of convergence. It's a bit slower now, but it's definitely something we'll see before the year runs out. But the good thing is, we're seeing the appreciation. Everybody is more or less they have the information of what the market, is saying and how the market is playing before bringing in, the funds in. And there's just clarity, and that's very good for, us going forward.
And definitely we're looking, forward to that data, showing that we're seeing more FPI coming in, more FDI. Yes,
because our reserves are really feeling the heat. It's already down by about $3 billion so far this year. And we do hope that we can, increase the reserves before the year ends, even if it's by about, $1 million. So it's quite sad that we've lost that so far, but we do hope that we're able to bring it back to at least $40 billion before the year ends.
Now, and looking at, how we're going, at this point, do you see more pressure, on our external reserves?
So obviously we've stopped the whole, I do hope that the government has really stopped defending the naira, because that was what was eating, so much of our reserves, and the fact that, there wasn't money coming in. So now that we would most likely stop defending the naira and just allow the market determine the rates, and we see, that there's that clarity and more people are bringing in their funds in, what definitely happens is that, you increase your reserves, even if it's slower than what we have seen in previous years. But the good thing is we're in the right trajectory to build up, our buffers.
Right, and looking at, the second half of 2023, where do you see the naira? What's your crystal ball telling you? We've heard so many, forecasts in from Bank of America. We've heard from, other, top institutions.
Well, they do see the naira getting to about 600. We do hope, and I think that's very optimistic. But if things go the way they are and the new administration is clear about all their policies and, just growth-enhancing policies in the market, that will definitely bring in more investors like we've always wanted. And, there'll be more investment within the country. And what that means is, your rates will definitely appreciate because they're demanding the naira more. And so I guess it's very optimistic, but it will be nice for us to get to that point. And I know it's not something that it's not achievable. It's something that we can definitely achieve if we definitely stick to the right policies.
It'll be great to hear more headlines, naira strengthen, going stronger.
And it will be interesting to see, what the new administration does. In the first few days of coming in, they did shock the entire nation, but going forward, it would be nice to watch and see what they do going forward. It seems like they're getting things right, or they're hitting the nail on the head.
Right on the head. All right, let's look at the grains market now. See, wheat futures dropped by 1.42%.
Yes.
And it looks like Russia might be getting some of their demands at this time.
Yes, because I think Europe is trying to secure supply, especially going within the next few months to make sure that there is no issue. Well, the issues that we had faced last year in terms of, significant drop in wheat supply. I think they're trying to make sure that that doesn't happen. And for Russia, for them to get that consent, or for them to, increase production and, be happy with producing, they're trying to see if they can give them some nice concessions to make sure that they do produce within the Black Sea deal. So it'll be interesting to watch what happens with that.
And looking at our exports now...
Obviously, that's good for us because we are, net importers of wheat.
Oh, yes. Looking at the exports, you see Nigeria exported about $53.2 million worth of cocoa.
Yes. That's
a big number.
Very big number, and it's superior quality cocoa at that. They did export that to Indonesia and the Netherlands, so there is huge demand for cocoa at the moment, especially from the top producers of chocolate. And that's great for us because we're actually number 4 when it comes to production of cocoa, supply of cocoa. And it seems like with cocoa, we're trying to get things right, and we've stuck to, maintaining that supply. We supply about, between 250,000 tons to about 280,000 tons if the weather, is favorable to us. And that obviously is, in terms of the external reserves that we've been talking about, that definitely supports that. So it's quite great that we're getting not just the supply, even the quality, and the fact that we're seeing buyers from all around the world. It's great.
And prices are rising.
Yes, and
prices are rising.
Prices are currently at about almost 3,400 $100 per ton, and that's huge at the moment, and we're definitely taking advantage of it. It's obviously not great for chocolate producers, because I know for the past few years they've tried to manage that by either reducing the quality, not necessarily the quality, but looking for substitutes in terms of what they add to the cost of producing a particular brand of chocolate, and also looking for ways to mitigate the problems that they've encountered so far. So we're on the supply side of things for once, and it's quite nice for us.
And I guess we need to now step up our chocolate production at some point.
I think we should stick to getting our supply right first, and then look at backward or forward integration.
Because I've seen some Nigerian chocolates and they're not bad.
They're not bad. They're not bad. But I think right now it feels like doing multiple things at once is not necessarily our forte. Yeah, so let's focus on what we're getting right now and solidify that, and then branch on or forward integrate into producing high quality chocolate.
High quality chocolate. All right, let's look at the oil market now. We're seeing prices are up today.
Yes, prices are up. Unfortunately, there's been this buzz around the market where most analysts believe that prices are expected to dip to about as low as $58 per barrel. That's not nice to hear, but with the fundamentals that are happening in the market, the fact that we're not getting a lot of, the global economy is facing the heat at the moment. High interest rates, high inflation, weak demand. Analysts believe that, the weak demand is going to continue at least till the next year. The Chinese demand that we had expected, they feel like this has been maxed out. And right now, there's no, they do believe that with Saudi Arabia, Russia, there's no increase in supply that they're going to do at the moment to have, that huge impact in the market. In a weak economy, when you increase or reduce supply, the impact of that is way limited.
And it seems that's all they have in their arsenal at this point. Cutting output.
Yes. So I think they've even extended the output cut till about August. That's the 1 million barrels per day that Saudi, surprisingly decided to take off the market. And many people believe that, this is not going to have any direct impact on the market so far. And obviously we've seen that because prices are still ranging at about $75 per barrel. And, well, we're trying not to be too pessimistic.
Right.
I think the $58 per barrel is going to be shocking, actually, for our physical balance, and the administration would definitely go back and review where they're going to get the funds for this current budget. So well, we fingers crossed. We know that
I'm all for lower oil prices, because at the end of the day, we've removed subsidy right here in Nigeria. We don't need higher oil prices. That would compound the problem.
Yeah, well, in the short run, but we're still looking at increasing our production. Obviously, Dangote refinery is in the system, and obviously going forward, we expect that just not only Dangote refinery, other refineries come into play, and we can actually, produce and consume our own,
and be that refining hub, for Africa.
Exactly.
All right, what are you seeing for the domestic commodities market?
Well, prices are quite high at the moment. The economy is currently, high. The cost environment is very high. So we don't expect that prices will decline anytime soon. Nigerians are going to literally face the heat in the next few months. It's quite sad to say, and I'm sure I don't like discussing this kind, because Nigerians are really feeling the pain. But with commodity prices are likely to remain high. From our slides, it shows it's all red, and we don't see that, except there's a harvest season that will bring prices marginally down, but we don't expect, because these new farmers obviously want to benefit from the high cost environment, and obviously want to increase their revenue as a result. So we don't expect that the domestic commodity prices to reduce anytime soon.
Just looks like your disposable income is being hit from all sides.
All sides.
Quite incredible.
All sides.
Quite incredible times. Thank you so much, Bolanle Agbaje, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you for having me.
All right, now, let's take a look at what's happening with the banking sector in Nigeria. Now, we see the first quarter of 2023 saw the Naira redesign policy pushing Nigerians to be cashless. But the shock definitely was felt by Nigerians, as most banks couldn't handle the volume of transactions on the digital channels. Cashless transactions grew by 44.84% to 126.73 trillion naira in the first quarter of 2023, from 87.49 trillion in the corresponding period of 2022. According to industry statistics from the Nigerian Interbank Settlement System. So that's what we're seeing there. But what can we expect for the banking sector in the second half of 2023? Joining me now is Mr. Silvana Seneche, Chief Risk Officer at Wema Bank. Great to have you on the show.
Thank you, Ladi. Pleasure to be here.
So definitely the first half of 2023 was quite dramatic for the global banking sector, you know, with the collapse of Silicon Valley Bank, Signature Bank, you know, First Republic, and most experts say it's the interest rate hikes by, you know, central bankers globally. For you, how resilient was the banking sector in Nigeria in the first half of 2023?
Okay, thank you very much. Exactly that. The Nigerian banking sector was resilient primarily because of the regulatory environment in which we operate. So the risk management framework of the central bank, I believe, helped most Nigerian banks to weather the storm. What happened is that with the interest rate hikes, and of course, there was a loosening of regulation in the United States, and that thus you saw most of the banks there taking certain decisions with regards to risk management that in a low interest rate environment seemed the right decision to make, but they had taken short-term money and invested it in very long-term instruments. And of course, when the interest rates went up and they had to mark to market, clearly they were carrying a lot of losses on their books. So in essence, the risk management framework of the regulator helped us to weather the storm. And I think Nigerian banks largely went through that period unscathed, at least with regards to the increasing interest rates. But more importantly, I think all along the line and right up to this moment, the CBN has walked along with the banks, constantly stress testing their balance sheets and ensuring that systemically the system is sound.
And talking about stress testing, how stressed were the banks in the first quarter of 2023?
Clearly, I mean, once you are in an environment where there's a lot of uncertainty, and I think you already spoke about the Naira redesign, it was a significant stress period for the banks. There was a lot of distrust from the banking public. A lot of them felt that the banks were hoarding new notes. So yes, there was a significant degree of stress. And of course, business activities slowed down prior to the election and are just beginning to pick up again. So to that extent, I will say that there was some degree of stress, but of course, working with the regulator, we sat down and all the banks, I can assure you, went through their books, ensuring that every aspect of risk that could be mitigated, that we did. And thus you see that the system came out healthy.
All right, we've seen the CBN, they've raised interest rates to about 22-year high in Nigeria, about 18.5%. How has this impacted loan, demand in Nigeria, in your opinion?
Well, there are two sides to it. The first side is, of course, with regards to discretionary items, the demand for loans has been somewhat weaker. So you would see that maybe those in the business of trading in luxury goods, they will see a dip in their sales and revenues because most people, of course, right now will only invest in purchasing essentials or what are deemed required goods. What we found is, however, that there's also been an uptick in demand with regards to people that need increasing working capital to do their business. I will give you an instance with regards to the deregulation of petroleum products. Marketers now need a significantly higher volume of credit to do the same volume of trade in terms of petroleum products that they were doing previously. So with regards to new loans, we have seen somewhat muted response, except for those that are being demanded for essential services. But with regards to existing customers, there has been an increased need for working capital. And of course, most bankers are working with their existing customers to ensure they meet that demand.
And definitely it's still all about the FX unification for most of the markets. How's this impacting the banks? And are Nigerian banks, heading for some kind of recapitalization with this unification?
Well, the FX reunification, I think one of the positives is the fact that to a certain extent, it has taken out some of the opacity in terms of the allocation of foreign exchange, and also giving exporters the opportunity to sell their foreign exchange at the ruling rate and thus get market value for it. What this means for us, of course, is that there's a higher demand for quote-unquote export type businesses. And that is good because the banks are, of course, willing to fund those businesses so that they can increase their export proceeds and thus fund those customers of theirs that want to do import business. What it means also is that there's an increased need, Naira leg, to fund the same volume of imports in terms of foreign currency. But for banks, what that means is that if you can, and also your customers, if they can push that cost down to their customers, you will see them repricing their products to meet that demand. Are banks headed for recapitalization? I would say that a number of issues have come to the fore. For instance, single obligor limits in terms of loans that you are giving out in foreign currency denomination, now having repriced them or marked them to market at the ruling exchange rate, you will need to now take a second look at do you need to cut down on that limit, or are you now under pressure to increase your capital buffers to be able to do the same level of business? I would say that every bank is taking a closer look at it. Of course, a number of banks are already sensitizing the market, and I think that in the medium to long term, you will see banks raising additional capital to close down those positions.
All right, definitely artificial intelligence is quite a hype, you know, right now, can't be ignored. How are bankers in this region warming up to AI, and what kind of disruption can we expect? You know, would AI impact maybe digital lending, you know, at some point?
Indeed, you might not know it, but indeed AI has already impacted things like digital lending and even the processes in the banks. Robotic automation, for instance, you use it to do things like reconciliation, repetitive tasks that can be devolved to a robot to do rather than employing banks of people to carry out that function. So indeed, with regards to decisioning, looking at the credit worthiness of customers, analyzing their statements of accounts which they present to make themselves eligible for credits, and also with regards to even breaking into new markets, looking at trends. Banks have thoroughly embraced artificial intelligence, and I tell you that it is already playing out in the market and it is here to stay. So Alert, for instance, which is our digital lending platform, uses significant AI to make credit decisioning.
Right. Well, I do hope AI finds me worthy of credit, you know, going forward. Well, thank you so much. We talked to Mr. Silvanus Oneche, Chief Risk Officer, Wema Bank. It was great having your perspective today.
Thank you very much.
Thank you. All right, let's head on to the markets now, and I'm sure Will must be trading with AI.
Yes, Laddie. Good
at
morning.
This point.
You just got my thoughts right. I was going to say I'm just going to adopt AI. Let AI do the thing for me. I just relax, sit back, relax. AI is working.
Making all that
profit, and I'm just taking it.
But what if AI makes a loss?
Well, that's where they say AI collapse. Where they have that thing where they just start creating their own
one wrong choice,
and that's it. But hopefully that doesn't happen, Laddie. But let's just see how this impact of the artificial intelligence penetrates the NG and the equities market. We'll see a phenomenal change, but we'll just hope.
Looks scary though. But
yes, in terms of privacy and security, gaps like that. Let's hope that we're able to fill that gap.
Yeah.
So. Anyway, we see the equities market sustaining bullish performance yesterday. Investors gained a total of about 534 billion naira in yesterday's trading session alone. Now, on the equities market, it picked up from where it left off last week, closing higher on gains on MTN Nigeria. So MTN Nigeria closing higher yesterday, Stanbic, Access Core. And the all-share index now moved up 1.61% to settle at 61,948 points. We crossed the 61,000 level yesterday. That's a new high. And now we're still at the 33 trillion naira mark. Now, year to date is also, moderated. We're now at about 20% for year to date. Now, looking at total volume, let's look at the activity chart and see what happened there yesterday. We saw 1.21 billion units of shares traded yesterday, valued at 14.04 billion naira, and deals transacted in 12,131 deals. Now, looking at sectors, let's see the sectors. All key indexes that we track were in the green yesterday, and we saw FCMB, most traded stocks. Looking at top trade yesterday, let's look at top trades. Looking at top trades, we see FCMB topping the trade yesterday, while Access Core was still the most traded stock by value at 2.38 billion naira. Now, look at positive market breadth yesterday. Still, investor sentiment in the market is still renewed. You see that renewed confidence in the market. For the second half, we are seeing that positive sentiment still leading on, and we see increased activities, upward movements. We saw over 67 stocks gaining yesterday and 14 stocks losing. But we have Ambrose Omodion, is the Chief Research Officer, Invest Data Consulting, joining me to tell us what's next in the market. Good morning, Ambrose. It's good to have you on the show.
Yeah.
Ambrose, it's more like people are wondering, are we in a bubble? And if it is, how long will this bubble last for?
Yeah, I mean, I would say it's a bubble, but market is having some good fundamentals to run the market to this level, and funds are entering the market. As at yesterday, I saw that the money flow index has crossed almost 85-point-something%. It tells you that funds are entering the market. It's high, but because we have opened our door to foreign investors, the exchange rate has made our market cheap. For that, it continues to look way. But investors in Nigeria should also know that the dynamics of the market has changed, and also to change our strategy, because now the market has confirmed really a bullish stand, because market have year to date has crossed a 20% gain. It tells you that really we're on a bullish run. And when you're bullish run, both the ugly and the good will be looking up. But it's now done on investor to look at their objective of being in the market, because all these the local stocks that have not dominated gain all these days are the ones that also look down when anything change the market. For me, it's the time to look at your portfolio, rebalance it to stock that has good fundamental for defensive purpose in case the market goes the other side. But the good thing is that any season is around the corner. This momentum we are seeing will likely to continue, especially if the state of these numbers we're expecting beat market expectation, knowing that in the last 3 months that just passed, we've seen that despite we saw in the last month of June and a change in kind of economic fundamental in terms of reform that brought kind of subsidy removal. I believe that companies on the exchange are still going to post a better number. If that is confirmed with the numbers we're expecting, this momentum will continue. And also, up eyes is still on the government that more policy that will come in that also add more momentum to the market. For me, investors should not be carried away with the up market, but set a goal and know when to take your profit, because market correction intermittently will come because of what profit taking.
And so what should investors be doing now?
No, actually, this is the time for them to leave their portfolio and take profit where we have made what profit, because if the market will not remain in this direction, and if you have entered your trade with a good trade plan, you're entering strategy and strategy. Now that you are in profit, nothing stops by taking your profit. That does not mean that you're going to set down your position, taking profit to what way the market is going and come back, because market will not remain in up direction. Because also, I tell you that sell in an up market and also buy in a low market, because market will oscillate. Once market has hit almost 62,000 naira, 2,000 mark we're seeing now, you're likely to pull back again. When you pull back again, you buy into the market, and market will take you up a down. You are not taking your profit, and that's the time you think that you don't know what you are doing in the market. It's the time to trade with your plan, and that your plan guide you want to enter the market and want to exit with profit. I know that many investors now are swinging to the bank because market are giving them opportunity to make money. But don't just say because market is going up, you become greedy, because fear and greed is what guide the market any given time.
Fear and greed in the market. That's twin, well, is it brothers and sisters that we just have to deal with? But what stocks do you advise investors, or what stock picks do you have for the market today?
For me, I would say that we still have potential in some banking sector, but now we're expected to expect little correction, because the main results starting in the market are from the third week and the last week of the month of July. For me, this time, let investors exercise patience and see market to pull back a little and start buying, because I expect that with market rallying all this while for the first half of the year, we have seen also a good move for the second half, for the first day, trading day for the second half. I believe that this is the time for you to take profit what the market time, because this number we're expecting outside in the market from the 10th week. Only the early filers were expected to see their result, in the second week of the month. For me, this is time for you to take profit, and there's no time to be buying as much. But unless you are in a position that you don't have much stock and you enter at a low price, you can buy more now. You are averaging up. For me, it's a good one. Not averaging down. Averaging up, which is good. But if you are in profit, it's time for you to catch your profit. And I can see opportunity in the banking sector, opportunity in all those who also look up stocks, and opportunity also in service companies, not only banks, a service company that on the exchange, the opportunity for them for investors to take advantage at this time.
So we're still looking forward to a bullish close today. Is that it, Ambrose?
Yeah, for me, yes, but it won't be as sweet as what we saw yesterday, 1.6, because already we're seeing that there's profit taking at this hour. So, but I mean the market will close in green, but not as up to like 1.61 we saw yesterday, but not in red. Marginal, green today.
This is going to take place, and in this high inflation environment, how do you see investors still trading it? Is it favorable for investors? Do you think that investor sentiments or investors' expectations for the MPC is going to dampen the trading activities on the NGX?
Yeah, for me, if you look at the inflation rate about 22.41, if companies at the end of the day, at the end of their Q2, we're seeing companies giving you an earning per share more than even 50% in terms of growth, that means those companies are likely to support what their dividend payout, and that means that the market will give you what the inflation, more than what inflation will give you today. If inflation is about 22.41, while stock are returning more than 50%, 30%, we are above inflation. That's the only instrument that I can give you such now. If you look at other fixed income that you are still below 16% yield and inflation about 22.4, you're already in negative return, no matter how sweet it is, no matter how they say the yield is, because inflation are taking care of now kind of put your return in green, in red. For that, I think equity is the place that investors should invest wisely to hedge against inflation, especially those companies that has their services a kind of inelastic demand. Whether they increase price, they're going to be demand for their product. This company are likely to post good numbers that will support their price at the end of the day. That is where investors should be looking at this point.
Definitely, that's where investors should be looking at stocks with, companies with inelastic demand. No matter what, the market still needs them. Thank you so much, Ambrose Omodion, for those insights. Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for joining us today on the show.
Thanks for having me.
So, Laddie, just put your money where,
Right.
It's right.
And definitely, once you're in a bull market, the worst thing in the world is when the market takes back all that profit.
True.
Yeah.
It's more like a bull trap. You're just falling into it, and then you don't even know when to come out because, like you said, the greed takes over. And really, then you get greedy. Yeah. You get greedy, you don't know when to take profit, and then...
It's so hard taking profit.
It's so hard.
Because you feel like you're going to get
more.
Quite incredible. Thank you so much, Will. Well, let's take a look at what's happening now in the UK with the cost of living crisis right there. Let's joined by Juliana right now via Zoom. Great to have you, Juliana. So we're seeing the cost of living crisis, still a conversation there with global food commodity prices dropping. Supermarkets and food producers have been criticized for being too slow to pass on those prices. But now we see the Sainsbury's boss saying food inflation is starting to fall. Are you seeing that?
Good morning, Laddie. We're not exactly seeing that just yet, but that is the mood music coming out of the trading update unveiled to investors today by Sainsbury's, which is Britain's second largest grocer. They've revealed that in the 16 weeks to the end of June, their sales volumes were up by about 11%, which is far higher than what analysts had expected at 9%. And of course, it comes at a time when supermarket bosses are in the spotlight because of high inflation and what the government, or in particular the Chancellor of the Exchequer, Jeremy Hunt, describes as profiteering. You'll remember last week, the bosses of the big four supermarkets here, so that is Sainsbury's, Tesco, Asda and Morrison's, they were all hauled in front of the Business Select Committee to ask why the fact that wholesale price cuts are not trickling down to consumers. They say they're doing whatever they can. And of course, last week we had an update from Sainsbury's saying that they would be putting £15 million towards price cuts. This comes on top of the £20 million that they already put on price cuts in March. So they say they're doing all all they can. And it does appear to show that in the data, consumers are regaining their confidence, and that is shown by the fact that prices and sales have actually gone up. So far, so good. We'll just have to wait and see what happens much later in the year. Of course, the fact that we had the King's coronation, we had the Easter bank holiday weekend, we also had subsequent bank holidays. Lots of people are, of course, eating while they were at home. But yes, as the summer months go on and as consumer confidence does, have a grip, we'll just see what the sales prices come out towards the end of the year.
All right, definitely looking out for that. But let's see what's happening in the energy market. Now, we see energy regulator Ofgem, they threaten action against household suppliers if they put investors before hard-pressed households. What are you hearing about this?
Again, this is all about profiteering, which has become a huge buzzword over the past couple of weeks. I think if we go back to the genesis of Russia's illegal war in Ukraine, of course, that triggered a massive energy crisis, which was acute to households in Britain. Since that time, energy prices have fallen by about 70%. But again, there are concerns that some of the price cuts that these big corporations are seeing at wholesale level are just taken far too long to trickle back down to consumers. The government already have a migraine in their hands because of what's happening with Thames Water and the fact that they may have to nationalise it. They don't want to have to go down that route with energy firms. Since the beginning of the energy crisis, I believe about 30 smaller energy firms collapsed in the UK. Lots of questions are being asked of the energy regulator as to why and how a lot of these firms were able to run in the first place. And again, it goes back to that term of profiteering, because I think the Chancellor wants to make sure that these firms are balancing the needs and the requirements from investors with the needs and the requirements from consumers. So there was a meeting with regulators and the Treasury last week. I believe lots of the comments and the headlines we're getting today are off the back of that. And the Conservative Party, in the run-up to an election, want to make sure that they're holding the big corporates to account, and they want to make sure that the regulators, like Ofgem when it comes to energy, like Ofwat when it comes to water, are doing their very best they can to make sure consumers are safe and are able to pay their bills.
Well, I guess at this point, you need to be careful what you profit from as a company. Thank you so much, Juliana. Always great to hear from you.
Thank you, Laddie.
All right, now let's take a look at what's happening in other markets. Now, see Bitcoin remains stable and set above the 30,500 support zone. But Bitcoin started a steady increase there. Did touch 31,000. Quite a jump there. Let's look at the market now. We see the sentiment in the market still greed. That's what we have in the market right now. Top cryptocurrencies that we track, see Bitcoin $30,915. It touched the 31,000 level. Big top that was 0.77%. That was yesterday, but it's lost that level now, 30,915. Ethereum, that's holding on at $1,949, 0.15%. We see investors thinking that there might be some kind of crisscross movement there between Bitcoin and Ethereum. Maybe Bitcoin heads downwards and Ethereum heads upward. That's what some investors are saying, and the chatter we're hearing in the market. Binance there, 245. That's the native token there for the Binance exchange. That's down 0.58%. Cardano, that's holding up 1.40%, up 29 cents. Still seeing some resistance at that 30 cents level. XRP, 48 cents. Up 1.26%. Yesterday that was down, but we're seeing some upward movement, some buy pressure there by investors in XRP. We still have that SEC case in the U.S. Let's bring in my guest now, Element Dambo, joining me via Zoom. Great to have you on the show, Element.
Oh, hey, Lottie. Thank you for having me as always.
Great to have you. So what are the charts telling you about price action for Bitcoin and Ethereum?
Yeah, no, starting off with Bitcoin, if you've looked at, I don't know, the last week or so, of course, Bitcoin rose to a one-year high. And now, of course, today, 4th of July in the US. So markets, the equity markets are somewhat closed, but you're still seeing you're seeing consolidation. So I think what you're going to see this week, of course, tomorrow when the markets reopen, you have the FOMC minutes. So you're probably going to get some moves around this. And of course, Friday, we have non-farm payrolls. But Bitcoin at the moment is still hovering around that 31K mark. And if we do see a breakout, it does look like bulls are targeting that 32K level. So potentially later on this week, we could see Bitcoin at 32K.
All right, will the second half be bullish? We've seen quite a move from the first half of 2023. What are you seeing for the second half for Bitcoin and Ethereum?
Yeah, and what we saw last week, of course, with consumer sentiment in the US coming in higher than expected, we are now for sure expecting more hikes from the Fed. So we did see markets somewhat react to this, but in overall terms, if you're looking at the relative strength index, especially on a longer term time frame, like a weekly or a monthly, it does look like Bitcoin needs to overcome some key levels first. But if it does, I wouldn't be surprised if you see Bitcoin ending the summer probably around 40K.
Yeah, definitely watching out for that, see how price action goes for Bitcoin and Ethereum in the second half. It's been a successful first half, but it remains to be seen what happens next. Thank you so much, Element Dambo. It's great having your perspective today.
Thank you as always.
All right, now let's look at the top gainers today. See who's topping the gainers counter. We see GCR $3.08, $41% up. Big move there, double-digit gain we're seeing. Big move, MakerDAO $993. That's up 9.72%. So we're still seeing some bullish sentiment with altcoins this morning. Aptos, that's $8.10, 9.70%. And we see Pepe there, that's the meme coin, new kid on the block. Meme coin's done so well, getting on the gainers counter up 7.79%. Let's look at the top losers counter now. Let's see who's topping the losers counter. See Flow, 8.29%. Down this morning, 67 cents. And we see Bitcoin Cash there. It's had an incredible move. In the first half, it's up about 200%, but now we're seeing some pullback. Profit taking 4.98% down, $281. And eCash, that's down 4.84%. And Syntex, 4.29% down. That's what we're seeing for the market. So it's not double-digit losses. We're still seeing the market, looking for direction right now. So that's how the market is looking today. And that's the program. Thank you so much for watching. Don't forget to join us at 1:30 on Business and Corporate for more updates and developments in the world of business. And you can definitely watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye-bye.